Here is a summary of the Salesforce Fiscal 2025 third quarter results conference call, focusing on key financial metrics, management's forecasts, risks, highlights, and lowlights, presented for reading aloud. Salesforce Fiscal 2025 Q3 Earnings Call Summary Introduction. We're here today to discuss Salesforce's Fiscal 2025 third quarter results. Please note that our commentary will include non-GAAP measures, with reconciliations available in our earnings materials. Our forward-looking statements are subject to risks and uncertainties. CEO's key statements. Marc Benioff expressed excitement about the quarter's strong financial performance, but emphasized that the real innovation lies in their technology. He highlighted the emergence of digital labor, powered by autonomous AI agents, as a revolutionary transformation and a new, expansive market for Salesforce. Agentforce. He announced Agentforce, their AI agent technology, is now in production, having secured 200 deals in Q3 with a significant pipeline. Agentforce is described as a collaborative AI that augments human capabilities and scales limitlessly. Salesforce has already implemented this across its support organization, envisioning a future where robots work alongside humans across all industries. Agentforce is presented as a solution to labor stagnation, offering unprecedented scale and efficiency. Demand is high, with over 10,000 agents built during Dreamforce and thousands more generated globally since. Customer adoption. Key companies like FedEx, Adecco, Accenture, and IBM are building their digital labor forces on the Salesforce platform with Agentforce. The technology is live on help.salesforce.com, demonstrating its accuracy and responsiveness with access to vast amounts of data. Competitive advantage. Benioff stressed that Salesforce can operate entirely on its own platform, differentiating them from competitors. He cited examples like Vivint and Adecco using Agentforce for improved customer support and efficient hiring. AI leadership. Salesforce is positioned as the leading global supplier of enterprise AI, processing 2 trillion Einstein transactions weekly, and now combining this with Agentforce. Platform unification. He reiterated the company's investment in unifying applications on a single core platform, emphasizing security and workflow efficiency, which uniquely differentiates their enterprise solutions within agentic layer. Trust and responsibility. Benioff acknowledged the responsibility that comes with advanced AI, reaffirming Salesforce's commitment to fairness, accountability, and empowering customers. Future outlook. He invited attendees to the launch of Agentforce 2.0 on December 17, promising advancements in accuracy and value. CFO's key statements. Amy Weaver provided the financial details, underscoring Salesforce's disciplined execution and strong outcomes. Revenue. Q3 revenue reached $9.44 billion, an 8% increase year-over-year, nominal and constant currency. Subscription and support revenue grew 9% year-over-year, with double-digit growth in Sales and Service Cloud, driven by strong ARPU growth. License revenue growth for MuleSoft and Tableau decelerated due to tough prior year comparisons. Geographic performance. Americas revenue grew 6%, EMEA 12%, 9% constant currency, and APAC 16%, 14% constant currency. Strong new business growth was seen in LATAM, Canada, and Australia, while the US and parts of EMEA remain constrained. Industry performance. Health and life sciences, manufacturing, automotive, and energy performed well, while retail and consumer goods were more measured. Multi-cloud strategy. Top 25 deals averaged more than 5 clouds each, highlighting customer trust in Salesforce for end-to-end customer experience transformation. Multi-cloud customers demonstrate higher spend, lower attrition, and drive ARR expansion. Data Cloud momentum. Data Cloud was included in 1/3 of deals over $1 million and 8 of the top 10 deals, serving as the foundation for AI transformations. Attrition. Q3 revenue attrition remained slightly above 8%, in line with recent quarters. Profitability. Q3 non-GAAP operating margin was 33.1%, up 190 basis points year-over-year, driven by revenue outperformance and expense management. Notably, GAAP operating margin hit 20% for the first time in company history. Earnings per share. EPS. Q3 non-GAAP EPS was $2.41, which would have been $2.59 excluding a 18-cent charge from strategic investment mark-to-market adjustments. Cash flow. Q3 operating cash flow was $2 billion, up 29% year-over-year. Q3 free cash flow was $1.8 billion, up 30% year-over-year. Remaining performance obligations. RPO. Total RPO ended Q3 at $53.1 billion, up 10% year-over-year. Current RPO (CRPO) was $26.4 billion, an increase of slightly over 10% year-over-year, nominal, including a $100 million FX tailwind. CRPO outperformance was attributed to early renewal favorability and strong new bookings. Agentforce was not yet a material contributor to CRPO, as it's early in the adoption cycle. Capital returns. In Q3, Salesforce returned $1.6 billion to shareholders through $1.2 billion in share repurchases and nearly $400 million in dividends. Total capital returns have now surpassed $20 billion. Management's forecasts for future quarters/full year. Full fiscal year 25 guidance. Revenue. Raise the low end of the guidance range to $37.8 billion and maintain the high end at $38 billion, representing approximately 8% to 9% year-over-year growth. Subscription and support revenue. Expected to grow approximately 10% year-over-year in constant currency. Attrition. Expected to remain consistent at slightly above 8% for the full year. Non-GAAP operating margin. Raise guidance to 32.9%, representing a 240 basis point improvement year-over-year. GAAP operating margin. Expected to be slightly below 20%, a 540 basis point improvement year-over-year. GAAP diluted EPS. Expected to be $6.15 to $6.20. Non-GAAP diluted EPS. Expected to be $9.98 to $10.03. Operating cash flow growth. Approximately 24% to 26%, inclusive of cash tax headwinds. Free cash flow growth. Approximately 26% to 28%. Q4 guidance. Revenue. Expected to be $9.9 billion to $10.1 billion, up 7% to 9% year-over-year, nominal and constant currency. CRPO growth. Expected to be approximately 9% year-over-year, nominal, including a $100 million FX headwind, and slightly above 9% in constant currency. Agentforce bookings are not expected to be a material contributor to Q4 CRPO. GAAP EPS. Expected to be $1.55 to $1.60. Non-GAAP EPS. Expected to be $2.57 to $2.62. Key highlights. Agentforce launch momentum. Strong initial traction with 200 deals closed in Q3, significant pipeline, and high customer interest. Financial strength. Robust revenue growth, expansion in operating and GAAP margins, and substantial free cash flow generation. AI leadership. Reinforced position as a leader in enterprise AI with Einstein and the new Agentforce technology. Platform integration. Continued. Success in multi-cloud adoption and platform unification. demonstrating customers' need for an integrated ecosystem. Data Cloud success. Strong inclusion of Data Cloud in top deals, highlighting its role as an AI foundation. Customer wins. Notable customer adoptions for Agentforce and other products across various industries. Ecosystem engagement. Strong partner involvement in Agentforce deals and increasing demand for training. Lowlights, or areas of caution/constraint. Geographic constraints. The United States and parts of EMEA remain constrained, impacting revenue growth in those regions. License revenue deceleration. MuleSoft and Tableau license revenue experienced deceleration due to tough prior year comparisons. Professional services headwind. The professional services business is expected to continue as a headwind to overall revenue growth. FX headwind. A $100 million FX headwind is incorporated into revenue guidance. Agentforce CRPO contribution. Agentforce is not yet a material contributor to CRPO due to its early adoption cycle. Data harmonization time. While demand for Data Cloud and Agentforce is high, the time it takes for customers to harmonize their data can vary, with some requiring up to 6 months. Significant risk factors. While not explicitly detailed as risks in the provided excerpt, implied risks include the successful adoption and scaling of Agentforce, the competitive landscape for AI solutions, macroeconomic conditions impacting customer spending, and the successful integration of acquired companies. The transcript also mentions that actual results could differ materially from forward-looking statements due to various risks and uncertainties detailed in SEC filings. Conclusion. Salesforce had a strong fiscal 2025 Q3, driven by impressive execution and the exciting launch of Agentforce, signaling a new era of digital labor. The company is well positioned to capitalize on this opportunity, backed by a unified platform, leading AI capabilities, and strong financial discipline. They are focused on profitable growth and delivering a new level of customer success. This concludes our summary of the Salesforce Fiscal 2025 third quarter results conference call.